Welcome back to Book Summaries channel. If you've ever wondered why some people work hard their whole lives but never get ahead financially, while others seem to grow wealth effortlessly, today's video is for you. Today, we're breaking down the #1 personal finance book of all time, Rich Dad Poor Dad by Robert Kiyosaki, a guide that challenges everything you thought you knew about money. In this opening chapter, Robert Kiyosaki introduces the two father figures who shaped his financial philosophy. His poor dad was highly educated and held a stable job but struggled with debt, while his rich dad was a businessman who didn't finish high school but understood how money works. The fundamental lesson is that most people spend their lives working for a paycheck, trapped in a cycle of fear and greed. Fear of not having money keeps them working hard, and greed makes them spend their earnings on lifestyle upgrades. Rich people, however, learn to make money work for them rather than trading their time for it. This requires a shift in mindset to see opportunities that others miss because they are too focused on security. By detaching your emotions from your finances, you can begin to look for ways to create passive income. The chapter emphasizes that the path to wealth starts with education, not a bigger salary. Understanding the difference between being an employee and being an owner is the first step toward freedom. Ultimately, it is your mind that is your greatest asset in creating wealth. Kiyosaki argues that the current school system prepares children to be good employees but ignores the most important subject, money. He introduces the most critical rule for wealth. You must know the difference between an asset and a liability. An asset is something that puts money in your pocket, while a liability is something that takes money out of your pocket. Many people think their home is their greatest asset, but Kiyosaki controversially labels it a liability because it requires ongoing expenses like taxes and maintenance. Wealth is measured by how many days you can survive without working while maintaining your standard of living. To get rich, you must focus your efforts on buying income-producing assets like real estate, stocks, or businesses. Poor and middle-class people spend their lives buying liabilities that they think are assets. The rich focus on building a robust asset column first before buying luxuries. Financial intelligence is the ability to read numbers and understand the story they tell about your future. Without this literacy, no amount of income will ever be enough to achieve true independence. This chapter encourages readers to stop spending their whole lives working for someone else's business and start building their own. Your profession is how you earn a living, but your business is what builds your asset column. Most people work to make their boss rich, then work for the government through taxes, and finally work for the bank through mortgages. Kiyosaki suggests that while you keep your day job, you should start spending time on investments that grow over time. He defines business, in this context, as assets that do not require your physical presence to generate cash. These include rental properties, royalties from intellectual property, or shares in companies. The goal is to reach a point where the income from your assets covers all your expenses. Once your asset column is strong, you can use the surplus cash to buy the toys or luxuries you desire. Most people buy the luxury car first on credit, which only adds to their liabilities and keeps them trapped. Minding your own business means being disciplined enough to put your financial future before immediate gratification. It is a commitment to long-term growth over short-term social status. Kiyosaki explains how taxes originally targeted the rich, but eventually shifted to burden the middle class and the poor. The rich have a secret weapon to protect their wealth: the corporation. A corporation is not necessarily a physical building, but a legal document that provides significant tax advantages. Employees earn money, get taxed, and then try to live on what is left. In contrast, a corporation earns money, spends what it needs on expenses, and is only taxed on the remaining balance. This spend first, tax later model allows the rich to keep much more of their wealth. Understanding the law and how the tax code works is a vital part of financial IQ. By using legal entities, investors can protect their assets from creditors and the government. Kiyosaki breaks down financial IQ into 4 areas: accounting, investing, understanding markets, and the law. Knowing how to navigate these systems gives you a massive advantage over those who simply follow the standard path. It is about playing the game of money by the rules that the wealthy use to stay wealthy. The author asserts that in the real world, it is often not the smart who get ahead, but the bold. Financial genius requires both technical knowledge and courage to take calculated risks. The rich invent money by seeing opportunities that others are too afraid or too uneducated to notice. Wealth is created by solving problems and being creative with how deals are structured. Kiyosaki shares examples of buying distressed real estate and selling it for a profit, often using very little of his own cash. This financial intelligence allows a person to turn a small amount of money into a large fortune quickly. Many people wait for a lucky break, but the rich know that they must create their own luck through action. The greatest risk of all is doing nothing or playing it too safe in a changing economy. You must train your brain to see what your eyes cannot: the flow of money and the potential in a bad situation. Developing your financial IQ expands your options in life and allows you to be the master of your destiny. Money is just an idea, and those with the most creative ideas win. Kiyosaki advises young people to seek jobs based on what they will learn rather than what they will earn. He tells the story of a talented writer who couldn't sell books because she refused to learn the business of sales and marketing. To be successful, you need to be a generalist who understands a little bit about many different aspects of business. He recommends learning skills like communication, leadership, and negotiation, which are essential for any entrepreneur. Most people specialize in one narrow field, which makes them highly replaceable and dependent on their employer. Rich Dad believed that you should know a little about a lot to manage people who are smarter than you in specialized areas. This chapter highlights the importance of overcoming the fear of rejection, which often stops people from learning sales. By diversifying your skill set, you become more valuable to the marketplace and more capable of running your own ventures. Constant learning is the only way to stay ahead in a fast-moving financial world. Your education shouldn't stop at graduation. It should be a lifelong pursuit of practical skills. Even with financial knowledge, many people still fail because of 5 main obstacles: fear, cynicism, laziness, bad habits, and arrogance. The fear of losing money is real, but it's how you handle that fear that makes the difference between a winner and a loser. Winners are inspired by failure, while losers are defeated by it. Cynics are little thinkers who focus on what could go wrong, while successful people focus on what could go right. Laziness often takes the form of staying busy with unimportant things to avoid facing the reality of one's finances. The cure is a little bit of healthy greed. Habits are more powerful than intentions, so you must cultivate habits like paying yourself first to ensure your asset column grows. Finally, arrogance is ego plus ignorance. Many people lose money because they think they already know everything. Overcoming these psychological barriers is just as important as learning the technical side of investing. You must develop a thick skin and a focused mind to navigate the ups and downs of the market. Success requires a balance of being realistic about risks and being optimistic about rewards. Kiyosaki provides a practical 10-step guide for those ready to begin their journey toward financial independence. First, you need a reason greater than reality, a deep want and don't want that fuels your motivation. Second, use the power of choice daily to invest in your education and your time. Third, choose your friends carefully. Don't listen to poor or frightened people, but learn from those who have actually achieved what you want. Fourth, master a formula and then learn a new one. Fast learning is more important than knowing one thing deeply. Fifth, pay yourself first. This self-discipline is the most important trait of a business owner. Sixth, pay your professionals well, as good brokers and accountants will make you more money than they cost. Seventh, be an Indian giver. by looking for investments where you can get your initial capital back quickly while keeping the asset. 8th, use assets to buy luxuries rather than credit. 9th, choose heroes to emulate so that you feel that if they can do it, you can too. 10th, teach and you shall receive. The principle of giving ensures that the universe provides for you in return. The final chapter offers immediate action steps for those who want to apply the book's lessons right away. Kiyosaki suggests taking a break and assessing what is working and what isn't in your current life. Look for new ideas by browsing bookstores for different topics or attending seminars. Go for a walk or drive through neighborhoods to look for sale signs or changes in the market. He emphasizes that you must make lots of offers, even if they are low, because the act of negotiating is a skill in itself. Don't be afraid to fail, as every rejection brings you closer to a successful deal. He also advises looking in specific places, like auctions or foreclosures, where the best deals are often hidden. Action always beats inaction, so even a small step today is better than a perfect plan tomorrow. The secret to wealth is found in your daily routine and your willingness to try things that make you uncomfortable. You are in control of the two most important things, your time and your mind. Use them wisely to build a legacy of wealth and freedom for yourself and your family.